Hey guys, this is Chris Clothier here with the Grind Podcast, coming to you again live from Memphis, Tennessee. And due to the enormous feedback we received from the last time we did a live investor interview, we decided to make this something that was a little more common, something we do a little more often. This week, we're lucky enough to be joined in studio by not only an investor of ours, but also a friend of mine, somebody who's also a very successful entrepreneur here in Memphis. And we're lucky to get to share his story, both on entrepreneurship and on real estate investing. If you want to be a guest on the podcast, if you want to come on and share your story, reach out to us. Let us know. The same way we've been getting feedback and questions and comments, it's fantastic. You can reach us through email, through the website, through our social media channels. Either way, Isabella behind the screen she's like raring to go. She's lining up the schedule, got all kinds of guests coming on. Is that right, Isabella?
Always.
She was very affirmative. So either way, guys, we appreciate all of the feedback we're receiving. I read all the comments. Of course, Isabella's always making sure we're replying to any comments that come through the social media channels. So we really appreciate it. And with that, I want to introduce our guest this week. I'm joined by David Allen. I'm going to let him tell his story, but I'm just going to say here, kind of for the setup, that David and I have known each other for, it's the second decade. It's about 15 years, right?
Yeah. I started training maybe 12 or 13 years ago.
Yeah.
So yeah,
it's been a while.
Yeah, over 10 years, over a decade.
Yeah, and so David is my personal trainer. He's a guy that I've worked with for a long time. My wife works out with David at his gym.
Sister-in-law?
My sister-in-law works out with at the gym. So we've got a connection. My sons work out there. Geez, we're going to keep going through everybody that works out there. But that's not why I brought him on. No. I brought him on because through the years, I've been able to watch David, and I'm going to use these words, I use them all with respect. I've been able to watch him grow as an entrepreneur, from a small business owner to a real entrepreneur.
Yeah.
And then from an entrepreneur also now expanding into a pretty savvy investor. So I wanted to share your story with everybody. So why don't you kind of kick in a little bit and tell us a little bit more of your background so everybody kind of knows.
Yeah. Okay. So I'll give you the kind of quick on the version on the front end. But I fell in love with training and lifting and health and fitness in middle school, and kind of from an early date knew that was what I was passionate about. Went to college, played college football. And then got a degree in exercise science and minored in nutrition. Thought I wanted to be a college strength and conditioning coach, and realized that was probably not the life I really wanted to live. Was a personal trainer at a commercial gym, which is where we first met.
Right.
And then quickly realized I was just not a good fit for that atmosphere. I think over the years I've kind of recognized I am a bit of a countercultural type person. I like to lead more than I like to follow.
Yeah.
And I just kind of realized, man, there's just not really a gym that fits myself and like my vision for what fitness should be.
Right.
And I don't remember if I had the idea myself or someone put the bug in my ear, but I decided to open up my own gym. In 2011, I was 25 years old. And my joke is I ran a gym for about 6 years, and I've ran a business for 5.
Right.
So like over those years, I had no idea what I was doing. I was young. I had no business experience, which is probably a bit of a good thing because I joked that I was like young, dumb, and broke.
Right.
So I didn't really know the potential negative outcomes that could occur. So I had no real fear going in, and,
right.
And it's not like I had a lot to lose, right? I was young, so I had a ton of energy. I wasn't married. I didn't have kids. I could put all this energy and 100% of my energy into my business. And the business grew. It just continued to flourish and grow and grow and grow. But it grew outside of my abilities as a leader and as a business owner, as an entrepreneur. And I kind of just realized, you know what, I'm ahead of myself here, and I need some help.
Right.
And which is somewhat interesting that being in a business that is all about guiding people, helping holding them accountable.
Right.
It took me 6 years to realize like I needed that.
Yeah, you needed the guidance
in the business aspect. So I hired I became part of a mastermind that's a mentorship mastermind called Two Brain Business, and that was the greatest thing I ever did because I was actually being poured into by people who had more experience than me and were holding me accountable to doing the hard things necessary to grow my business. So that was like a very tough transition, but the best business decision I made. That it poured even more gasoline on the fire of the business.
Right.
Which then created more opportunities for me financially to then say, okay, how can I take these financial gifts that I've been given, steward them well, and impact the world through like my passion? And so that's what has led to opening up other businesses, expanding expanding into a second location of MBS Fitness, but also opening up the Ninja Gym that you're aware of, and then going outside of just my own business and finding other opportunities to invest. So that's kind of the short version of that long story.
Well, there's a couple things I want to make. I had questions for you, but I want to go back to something that you said just real quick so everybody watching and listening can understand. Because a lot of times mentorship, a lot of times mastermind, a lot of times business coaching, real estate coaching, all of these things are, in some respects, are cuss words. They're like, that's it's all a fad, it's all a scam, it's all. I love the quote people say that people that teach because they can't do what they're talking about, which is it's the most backward way of thinking about things. But for my viewers and that are out here listening, and everybody that's we're all for it. We have business coaches. We believe in real estate education, but you only get what you pay for, right?
1,000%.
Which you used words I wanted everybody to make sure that they heard. You said that the reason you were successful is because you were being poured into by people that had already achieved where you wanted to go.
Yes.
Is that right?
100%.
Which is the biggest difference in what makes a mastermind work and not work, or what makes coaching work and not work is, number one, the person you hire, but also, where are you at? Are you open?
Yeah.
Am I open to listen?
Yeah. I think you have to be careful because there are,
of course,
business coaches, masterminds out there that are primarily a income generator for the owner.
Well, you told me yesterday. What happens to you on social media?
Oh, I get reached out to by like hundreds of people trying to tell me how to grow my business to like a level that I'm already at.
Right.
And I know for a fact, because it's like part of our mastermind is we look at the data across the entire world. I'm like, I'm already in the 1%. Like, just doing the math, I'm like, there's no way all these other people are also in this 1%.
It's like I was telling you.
Because I know I'm with most of the people who are in that number.
I get solicited on a daily basis. Mine happens mostly through LinkedIn.
Yeah.
I know yours is all on other places, but mine happens mostly through LinkedIn, where people want to help me raise capital to take my business to the next level, want to help show me how to grow my portfolio, and all that's great, that's fine, but that's kind of I think why there's such a negative perception. But you're a great example of kind of put that negative off to the side, be focused on who you're going to hire and why, and if you get with the right group, you
have to vet it out and make sure you are with the correct group, and I did that.
Right.
And then the flip side of that is you also have to, once you make that choice and make that investment, you have to be willing to do what they say.
Yeah.
Even within the mastermind, the group that I'm with, there's a very clear delineation between those people who follow through with the SOPs that are given to you. Because even the best thing the mentor can do is say, hey, here's what you need to do. I'm going to check in with you and hold you accountable, but you have to then do it.
Right.
And there's a clear delineation between those people who do it and those people who don't, because out of fear or lack of trust or whatever it would be. So I do think you have to be careful with who you hire as a mastermind, but I think the more I do this, the more I realize mentorship or leadership, having a guide is a fast track. It's a time machine. So, in other words, you and I are a good example. You could go through all the hard work of researching all this stuff, getting all the hours in. You could, to learn what you need to do to reach your health and fitness goals, right?
Right.
But that requires a lot of time, a lot of energy, and a lot of investment loss, because now you're taking your resources out of something else that you are expert in and try to put it into this.
Right.
So it's easier for you. It's a better investment for you to just hire me and go bam, bam, bam.
Right.
And the flip flop of that is you understand the necessity and some of the framework around fitness, so we can have a good conversation. But then I can say, hey, this is what you really need to do, and vice versa. I can understand the framework around real estate investing.
Right.
But I'm not an expert on it.
Right.
And I don't have the time, resources, or the really desire to become one.
Right.
So what do? Is I partner with the best of the best.
Right.
Because you're a time machine.
Right.
It costs me some.
Right.
It's going to cost me, but the cost of that is I'm going to get a way more ROI than if I took all this time and tried to figure it out on my own.
The way I always frame it to people is, when you get started at something, it's an uphill. Yeah. It's an uphill road.
Yeah.
You're moving uphill. A coach, a good mastermind, these people, they flatten the road for you.
Yes.
That's really what
you
they
still
do.
got to walk it.
You got to go.
Yeah.
You got to do it.
Yeah.
But they're going to flatten the road. They're gonna take some of that work out of it. They're gonna put those hills and make it flat. As best they can.
Yeah.
So real estate investing.
Yeah.
You got into real estate investing, if I'm not mistaken, out of necessity, because you had a growing business that was constrained because you didn't own the space you were in.
Yeah.
Am I right?
Yeah. So I leased out space.
Right.
As a tenant, and my landlord also owned the building behind me.
Right.
And I remember thinking, man, that would be the coolest gym. And then one day, because the way it was set up was like it would be a cool gym. And then just one day there was a for sale sign on it. I was like, wow. Okay, like we're growing. We need more space. We've expanded as far as we can. We'd already expanded in our space once, and we're like, well, there's nowhere else to go.
Right.
So I just went up to him and said, hey, I'd be willing to buy that building if you would let me out of my current lease. I had like another couple years on it, and he agreed to do that. But there was a tenant in that building who had another year on their lease.
Right.
Now, I had not purchased anything.
You had me purchase your first house, right?
I had never purchased anything on any type of leverage credit at all. Like I bought my car in cash.
Right.
I had gotten a personal loan from my parents for the or for the gym equipment, which I had paid off.
Right.
And I hadn't bought a house. I was still renting my own house.
Yeah.
So I basically had no idea what I was doing when it came to buying a building. But luckily, my dad was a commercial lender for however many years. I'm still in my 20s at this point. He was a commercial lender, so he helped kind of guide me through this process of purchasing this building.
Right.
And for a year, I got like $1,200 a month in cash flow from that building. I was like, this is awesome. I was like, crap, I don't know if I'm going to move this.
Yeah, I don't want to go. I want to release it.
I don't do anything for this. I was like, I own this building. I don't do anything for it. Like, it's this other people pay me a cash flow positive of $1,200 a month. This is great.
Right.
And so I think that was kind of the first experience I had. And we go, this real estate investing thing might be something worth looking into, right? So.
And you do the exact opposite of most people that I talk to, because the journey of most investors is, I go single family, then maybe I do multifamily, and the pinnacle is one day I'm going to do commercial. You're like, I'm just buying a commercial building.
Commercial, Well, and the beautiful thing about having commercial real estate that you are self-leasing from as a tenant,
right,
is, man, you just have so many options from a cash standpoint.
Yes.
Of how you want to distribute that money.
Yeah.
Where you want to take your deductions, where you want to put money towards, like, you just have a lot more options.
So for people watching, I mean, you're in a building that a company owns. Now, myself, my dad, my brother, as a partnership, we own the building. Yeah. But REI Nation is a resident of our building. So same thing with you. Is that right? You set up a company or a corporation, whatever, an entity to own the building.
Right.
And then your business entity leases that back from you.
Correct.
Which
gives you so many great options.
Absolutely. All right, so you, I'm gonna come back to the very end about you and I on the training side,
Okay.
because I think that again, I'm having you on the show because my level of respect is like up here for you on all kinds of levels. But also, I remember the conversation we had right out there in that parking lot about me coming back to work out with you because I didn't work out with you for a while.
Yeah.
And your questions that you asked me, they resonated with me really from a standpoint of how we do business here.
Yeah.
I mean, that's the first thing that dawned on me was like, you have grown as a business owner where you conduct your business to me like a category of one.
Yeah.
There's completely foreign to any other gym owners that I know of. So let's talk for a second. I'll get to that and say, let's talk back to buying houses.
Yeah.
Tell me about that journey. What did you do? I know that you've done some stuff with us. This was after you already bought your first house, but kind of tell me about in your mind, the journey to here. And then we're going to talk too about the other stuff you do. Because it's not just commercial and houses, it's other stuff.
So as I started growing in business, again, that started offering investment opportunities because I was making an income greater than I had made at that point.
Right.
My wife is a veterinarian. She had student loans, and we always were trying to be financially intelligent, paid off student loans, and kind of got to this place where like, okay, we have a significant amount of cash left over at in the month because now I said previous to this, I don't have any debt.
Right.
So we had paid off all of our debt, and we already put a significant chunk into the market in equities.
Sure.
And kind of like, okay, like what's the next thing that we need to start kind of diversifying into? And I've known y'all forever.
Right.
Realize the positive aspects of getting into real estate investing, and just basically like, okay, this is what I need to do. I need to diversify as much as I can and start finding other areas to invest in. So and it was never really, I knew I did not want to be a management I did not want to be a rehab company.
Right.
I did not want to be a management company.
Right.
I've known a lot of people in the Memphis area who do all that. They buy properties, rehab it themselves. They manage it themselves, and just quickly was like, I have zero desire to do that at all. What I want to spend my time in is fitness. That's what I love.
Right.
So I was like, kind of like I said, it's basically no brainer. You guys find the properties, you rehab them, you find the tenants, and you manage the whole process, and it's the easiest thing in the world. So that's why I decided to go into that realm.
Right.
So
right, and it kind of, if I'm not mistaken, so who'd you work with? Who do you work with over here?
Taz
and
Chase.
I'm assuming that Taz on the Taz to help you build a portfolio. Chase helped you close it.
Yeah.
Not that you don't have to tout Taz per se, because Taz gets plenty of up talk, right, Isabella? We don't have to boost Taz here, right? I'm just kidding, Taz, when you watch this. But I'm assuming that did you like that process? I mean, was that something that fit well with you with what you're doing? Like you said, my focus is fitness. Yeah. I need to invest over here, so I need a process that fits what I want to do as well.
100%. Like I said, I want to make sure that I'm going to get a return on investment on my time and energy. So I think I probably reached out to you or maybe Brett or someone and said, hey, I'm ready to get a house. And y'all said, here, I'm going to set you this up. I said, Taz, hey, I'm interested in a house.
Right.
He says, cool. The next day, here's some houses you can choose from. Which one do you like?
Right.
Went through that, said, I like that one. And then the rest was just kind of like just following through those checklists. I know exactly how it's going to go. Y'all communicate very clearly. Okay, cool. Now that we have this is the this is the next steps. I can see in the spreadsheets y'all that y'all send all the potential projections and do the math myself.
Right.
Being a business owner and going through financials on a regular basis is helpful to me because I can understand them and see, okay, here's my general expenses, here's where my revenue is going to be, here's my projected cash flow, here's how I can be able to depreciate it, so on and so forth. I can kind of see that plan out over the long term. but then everything else is handled for me.
Right.
I mean, from the stand, like even like lately, because I'm about to get another one, is they it's like, hey, you can find your own inspector, or here's one for you. It's like, I don't want to go find my own inspector. I've used that guy. You can go find your own. You can go find an insurance. I was like, I don't want to do that.
Right.
I was just like, to me, it is as simple as me just saying yes on an email, and that moves the process forward.
Right.
You know.
Right.
So like to purchase a house is literally a text message to Taz and probably a 10 email chain between Taz, myself, and Chase, and then I do and then I close.
So did you have any prerequisites? Any things like I want to stay away from, or anything I want to focus on?
I don't think I at the time. Well, in the conversations that I had, I was like, "Hey, educate me a little."
Yeah, yeah.
And so we did know we wanted to look into Texas properties for the asset appreciation.
Right.
And this was 5 years,
yeah,
4 years ago, before it jumped even more.
This is before it really appreciated.
Yes,
this
yes.
is when normal appreciation was 9 to 10% in the Texas markets.
Yeah. So that was kind of what we were looking for.
Right.
I mean, I kind of had a cash value or a cash amount that I could put into a house.
Sure.
It was kind of like this amount range, which was within the range that you guys do. I mean, I already knew these are the type of properties that you guys kind of special in, so I kind of had that cash.
Right.
So I kind of said, here's my range. I'm looking at Texas properties. Show me what you got. And then from there, it's just, this is an area where I'm not that fluent in, and this is where I kind of say, hey, give me your opinions on these houses.
Yeah.
Is the question I'll ask. Hey, of these three, just give me your thoughts. Like, what do I need? What am I looking at? And that's the conversation I have with you, or I have with Taz, or so on and so forth. It's like, give me some insight into this, so I can understand a little bit better.
And then I know we had that conversation even here recently because interest rates have gone up.
Yeah.
And we sat down and we talked about, and I know I'll share with everybody if it's okay with you that no real details here other than the interest rates that we're paying today.
Yeah.
The real reason why investors interest rates should not slow us down is that this is one of those few points I think in history where you're able to read the tea leaves, you're able to read what the Fed is doing, you're able to read the Fed minutes, and you know that rates are going up.
Yeah. Now,
are they going to go up by a quarter point, a half a point, a full point? Don't know, but we are historically low. Even at 5.5 to 5 3/4 right now for investors, we're still historically low.
Yeah.
Especially when you look at long periods of time. 5 years ago, within the last 5-10 years, that's not low.
Yeah.
But historically, we're low. I think some of the things I explained to you is that we feel highly confident that rates are going to go up. So any dollar you spend today, it's greater value than the dollar you try and spend 30 days from now.
Correct.
One of the fascinating things that I'm looking at is that especially investors in our scenarios, we should be looking at a 5 to 7 year hold.
Yeah.
Now, I would say a 2 to 3 year hold on the short end, especially in markets that are appreciating a lot or very quickly. And especially if they're appreciating due to just this outsized demand. That's Texas. I mean, with it, they can't build them faster. They can't even put it as fast as they want to go. It's still not fast enough for the growth that's happening in Texas and the pent up demand. So you've got this demand that's going to go. You've got this expected appreciation, but now your dollar is locked in. So inflation's higher than what you're paying. So you're actually almost buying a house and you're borrowing at zero.
Yeah.
Because your inflation is outpacing what you paid to begin with, even if you did pay higher. When rates do shift, and they will shift again. Let's say if rates come down in the future to boost demand 5-7 years from now, and you're able to refinance into a lower rate, but you already locked in at a rate that was basically zero because inflation was so high while you held it.
Then you can take the equity value out of that house and then go invest in new stuff.
I've tried to explain to a lot of investors one-on-one, haven't really done it through the podcast yet, that inflation is it's a bad thing for us personally, but it's not a bad thing for what we're doing here from an investment standpoint. Higher rates aren't necessarily a bad thing. It's just a line item. I mean, and go ahead.
Well, I was going to say, I think the way I look at an investment is it a good investment or is it a bad investment?
Right.
Meaning that, yes, purchasing a house at 2.25% is a better investment
Sure.
than purchasing at 5.25%. But if that's not available to me, is the 5.25 still a good investment?
Right.
And the answer is yes. And I'm not going to not do it because this was a better investment. Now, like, I'll look across the board and look at what are all my investment opportunities out there. But the beautiful part about real estate investing is, like we've talked about, it can't go to zero.
Right.
It's a you have someone else basically paying down the mortgage on that property.
Right.
And at some timeline, it's going to be a great investment.
Yes.
So it's not as long as you don't necessarily need that thing to flip positive in a year or two,
right?
Or you don't need some substantial cash flow today. Then that's still a great investment, and it will probably always will be.
Yeah, let time work for you.
Yes, right.
So we've been longer, as we both said we would go, longer than what we normally go. So for those of you watching and listening, I'm going to start to wrap it up. But I got a couple of things I want to ask you about, because I also know, I have the benefit of knowing that this is not the only investing you're doing. Yep. And so I want to encourage all of our listeners here that, and this is something that we, like, I know I have encouraged you. Like, yeah, sure, we do houses, but this is not the right, like, we want to build portfolios that make sense for each individual investor.
Yep.
And it's going to tie back to our conversation in the parking lot. You've done other investments, and you and me have talked about it, and I know that I've told you in the past, you don't need to just buy houses. Yep. You need to do these other things because you understand them, they make sense to you, they fit your risk profile. Yep. Tell us a little bit about some of the other stuff you've done.
Yeah. So I also have the benefit of having another long-term client who does multifamily syndicates.
Yes.
So they'll do they'll do land development, purchase land, develop that land, and then start doing multifamily syndicates on that land. So there's been opportunities for me to get on some of those land deal syndicates, even some of the multifamily syndicates, and then I have invested in other commercial properties for my other businesses. And so I think, from my standpoint, I've got some passive stuff that I'm not very active in different types of real estate. So some single family, some land, and some multifamily syndicates.
Right.
I've got some stuff in the market. Then I have my active business investments, which is my primary investment opportunity that provides me my greatest income is my entrepreneurial pursuits. So my multiple fitness businesses that I own, but then that kind of collectively is how I have set up my current portfolio.
Right. Yeah. And you, just for those I have learned from you, because you've learned some things through your mastermind on some financing options, some things that take a little bit of legwork, but if you're willing to do the legwork, some unbelievable terms you've received on some commercial stuff you've done. Am I right?
Yes.
I mean, it's just, and we don't have time to go into all that here, but I know that a few times we've been working out and I've been like, hang on, stop.
You got what?
I need you to explain this to me, because what you're talking about is stuff that, of course, it may not necessarily be available for single-family homes, but on the commercial side, it was astounding what you've been able to accomplish. It all goes back to that mastermind.
Yeah, it's being around other people who are going to put who are going to positively impact your life because they've got experience and they want you to be successful, and you have an openness and a willingness to absorb what they're talking about.
Right.
And so it's just kind of being around. Almost all of my investment opportunities and knowledge has come about around just being around people and creating relationships with people that is mutually beneficial and helpful for all.
Right. All right, so I'm going to end it with this. Do you remember the conversation we had down there in that parking lot? This was now October of 2020. So coming up on 2 years, so almost a year and a half ago, I'd already worked out with you for maybe 5 years, and then we took time off, almost 5 years. Mm-hmm. In that time, I ran that 100-mile, or attempted the 100-mile ultramarathon. got in the best shape of my best, got the best weight of my
lowest weight.
I got the lowest weight I've been as an adult. But then quickly, when I met with you, I was at the highest weight I've been as an adult. But do you remember what you told me when I asked, hey, can we train? Will you train me again?
I remember the conversation, but I don't remember what my answer was.
Okay.
What was my answer?
Well, it was no. Because it wasn't a straight no. It was, why do you want to work out?
Okay, yeah.
And my answer was that I was really motivated.
Yeah.
I was really motivated. And your response was, nope. You weren't willing to train me if I was just, and I'm going to use my air quotes here for anybody that can't see, if I was just motivated.
Yeah.
And your answer like resonated with me, because it's the same reason why we won't sell real estate to everybody that comes in and wants to buy real estate.
Yeah.
Motivation does what? Does it?
It wanes. It goes up and down. It's like motivation is really kind of irrelevant. How you feel about something is not the trigger for whether you do it or not. It's either the right thing to do or it's not. And so if motivation is your catalyst, guess what? You're not going to take action very often.
You made me think. That was your exact answer. Your answer was like, motivation comes and goes, dude. Because you had no interest in wasting your time.
Yeah.
With somebody that was going to call on a random Tuesday and say, well, I'm not motivated today, so I'm not coming.
Yeah.
You didn't want to do that.
Yeah.
We don't want to work with investors that are motivated to make high cash flows.
Yeah.
Because they're not going to take advantage of interest rates in a highly fast appreciating market, because it doesn't cash flow what their hyper focused thing was. It's just not
very short.
Yeah.
Short framework of sight.
Right. We really want to help investors understand that there's this big picture. And so what you told me to do was, I want you to tell me why you want to work out. And you drove me to my answer was, when I'm 80 years old, I want to be snow skiing.
Yeah.
When I'm 80 years old, I want to be running marathons and hanging out with my grandchildren and maybe make it to my great grandkids.
Yeah.
And after that, you was like, let's start Monday.
Yeah, I'll do that.
You were like, let's start Monday.
Yeah.
Because that's something that I remember you told me. You said that's not motivation. That's what we can work towards. That's
vision and value, and that's a different thing.
Yeah, go ahead.
It's just like vision and value is what's going to. That's your big vision, long term approach for like, why am I doing this? And like that's a long time frame. That's a big out there goal. And so when you have that, you'll grind through those days where you are not motivated. Or you're like, God, I don't want to go to freaking gym today. But I'm going to. Why? Because this is where my values are, and my vision is this, and therefore I'm going to do this. And there's days where I am motivated, days where I'm not motivated, right? The same thing with investing is there there's times you'll be like, ugh, my tenant messed this thing up. Well, crap,
Yeah.
But it's like,
I want out.
Yeah. And you're just like, well, that's my long-term vision fits within this.
Yeah.
And so that little tiny thing doesn't change your big approach to achieving that vision.
Well, you really walked me through. You helped me understand that when I attempted that 100-mile ultra marathon, I most likely was not physically fit.
Yeah. You had great endurance, but your fitness was bad.
Right.
Yeah.
And again, that's where I go back to this thing of where I was saying, like, to me, you're really kind of a category of one type person. I'm sure there's others that share these sentiments, but I don't hear it very often, where people, they talk about fitness, and you help me understand lots of things. If you're in a wreck, can you lift yourself up out of something? If something falls on you, can you lift it off of you? Can you push something where it needs to go? Can you outrun somebody that's trying to chase you in a short distance because you're fast?
Yeah.
Can you outrun somebody in a long distance because they have endurance? Because if you can't do all those things, you may be strong or you may be able to run far, but are you physically fit? And those are all the things that you have to be in order to get what I want, which is longer life, healthy life, active life.
Yeah, you can think of it. It's like I'll use investment because we're on an investment podcast, but it is diversifying your portfolio.
There you
right?
go.
if all your chips are in the same color,
right,
and something bad happens, you're in a bad spot, right?
Right.
So if all your money is tied up into a single stock, and then that company doesn't do so great, you're in trouble, right? And likewise, if all your fitness is tied up into one particular capacity or skill,
Right.
like if your like determination of fitness is like what your weight is, that's not a clear indication of whether you're fit.
Right.
Right. So
Right.
yeah.
Well, all right. So if people want to get in touch with you, if they are interested in hearing more about your portfolio, if they're interested in fitness, if they just want to ask a question, is there a way they can get in touch with you?
100%. So our website is www.mbsfitness.net. You can find all the information about our company on there. We also do a podcast called MBS Fitness Radio.
In like
N as in no BS Fitness Radio. And where we share fitness success stories and then share tips and guidance to help achieving personal fitness. And then you can find me. My name is David Allen. I'm on Facebook and Instagram, and my email is david@nbs as in nobsfitness.net.
That is fantastic. Well, hey man, I appreciate you being here with me today.
Awesome.
Everybody that's watching on YouTube, you guys take care. Leave us comments. Respond, react. Send me an email if you've got questions. Send David if you want to connect with David. And until we meet again, guys, until we're back here with the next podcast, commit to the grind. We'll see you.